That's an interesting story. So we all know this evil company Moody's that basically was part of the reason why we had the 2008 crash. They had all these crappy mortgages with defaults. Companies would tie them up and Moody's would put an A plus stamp on top of it to sell to investors, and half of those were defaults. Obviously, those collateralized debt obligations were part of the toxic debt that caused the crash. And so Moody's went back and said, okay, we've got to do a better job of this. And so they started basically making sure that their future ability to gauge risk included elements like climate change. When they looked at it, they realized that the biggest long-term risk that our investors are taking is climate risk. Once again, who cares what causes it? It's obvious that something causes it. So they looked at it and they said, we don't know enough about this stuff. So they went and did research and they realized there was a company called 427 that already for years had been advising governments and pension funds and people like Blackstone's and cities about the impact of climate change. They went and bought this company. And what they did was they didn't just buy this company. They took the company's 6-step rankings that basically look at every kind of event: flooding, hurricanes, typhoons, extreme heat, wildfires, drought, water tables, tidal flooding. They looked at all of that stuff that this company was looking at, and they incorporated that into the Moody's ranking, the big Moody's ranking that everyone in Wall Street uses. That there's literally trillions of dollars of transactions happening based on Moody's rankings and S&P 500, these two companies. When somebody from the Danish pension fund wants to buy $2 billion worth of some municipal asset, the rating that they're looking at is the Moody's rating. Now the Moody's rating, it has the climate risk stuff incorporated. So this is the third rung where basically now the ratings agencies are saying everything we do, we believe that climate risk is real because we're looking at the $80 billion in annual losses, and we see that those losses are going up much faster than inflation. They're not going up 2% a year. They're going up 20, 30, 50% a year. So we think it's real. There's no argument. We're going to take that and stick it into every rating we ever do. Can you imagine the impact? There are millions of stock transactions on the New York Stock Exchange every day that are now influenced by this, and nobody knows. And so that is so powerful. That is so incredibly powerful because it's almost like it's affecting you every single day if you're trading anything, and you don't even know that it's affecting you. And then you have superstar, or I should say mega star companies like Apple that are clearly stating that we will not work with any supplier for an iPhone that does not use climate risk or climate change and climate risk in their evaluation of their sub-suppliers, their locations, and the projects that they're working on. If you don't provide us with a clear methodology for how you're using climate risk, you can't be a supplier for the iPhone, the iPad, and the Mac.
Wow.
Look at the impact that creates in a $2 trillion ecosystem that Apple has created, and the $10 trillion worth of suppliers, that the downstream suppliers that Apple buys its products from. Because if somebody forms a ESG strategy, they can't just say, we only apply this to Apple. They have to then formulate that and apply it across the board and say, this is our strategy. So even if you don't believe in climate change, your board's going to push you because your main buyer is Apple, and they do that. So Apple is very heavy on this, which is why it's forcing Samsung to be heavy on it, because Samsung supplies every screen on every iPhone. And those are $100 screens. So it's a gigantic amount of money that Samsung receives from Apple, hundreds of billions of dollars. And so when Apple forces Samsung to do this, they have to create an ESG department that's overseeing all of their climate change initiatives. And then they have to roll it across every single arm of their company. And that's what's happening. Big people forcing everyone else to follow their lead.